Well, Canary Capital is going to list their spot XRP ETF next week following the success of their Litecoin and Hedera funds. This article from November 6th covers that, and it also brings out some new information about the generic listing standards that is a bit of a slight revelation. Let's talk about that.
Check the mic and make sure it sound right.
Hi, I'm DKWILL. This is DKWILL Talk About It. And Canary Capital is going to be listing their first XRP spot ETF. This article mentions that issuers like Canary Capital have been scrambling to address Wall Street's voracious appetite for crypto focused funds beyond market leaders Bitcoin and Ether amid a more favorable regulatory and political environment for the industry. And they are planning to release their XRP ETF next week. Stephen McClurg, their CEO, said, "We just launched the first two ETFs last week, and we're hoping to launch an XRP ETF next week." He posted that during Ripple Swell 2025 panel. McClurg pointed out that the U.S. and Securities Exchange Commission's newly approved generic listing standards. Now, this is where the revelation of something new comes out. Issuers can introduce ETFs to U.S. customers if their futures for a token have traded for at least 6 months. That's a typo. That's the wrong there. It should be THEIR. So that's a feature of the approved listing standards that we didn't know. But see, that's like I've said in many of my videos. These exchanges, these financial institutions, they know exactly whether it's a 1933, 1940, or whatever law. They know what they're doing. If there needs to be an S1 or a 19B4 or an 8A, they know exactly what they're doing. And what did they do with this one? It says the application process entails two methods: a delay amendment, which requires the SEC to make the fund effective, or a no delay amendment, which automatically goes effective in 20 days. We've talked about that before. We know that the no delay amendment is basically when you can become a little more comfortable. If you're comfortable with your filing, which we are, you file a no delay amendment, then that means you automatically go effective in 20 days. And we know that they have been collaborating, Canary in particular, for many months. I did a video, I'll put the cards up above there. It may have been all the way back to October 8th of 2024 that they began their collaboration with the SEC on releasing these spot XRP ETFs. They submitted applications for Litecoin and Hedera ETFs with no delay amendments a couple of weeks ago, and both landed on Wall Street last week. But relative to the XRP ETF, it says the asset manager filed for the ETF with a no delay amendment 20 days before November 13th. And guess what November 13th is? November 13th is on a Thursday. And you remember, Thursdays are nice, right? I just recently posted that on my X page, but Joel Katz had a thing about Thursdays on his X page. This one here from November 2021. Only attempt gematria on Thursdays in the late afternoon. At other times, it doesn't work. And when we scroll down a little further, I did a search for Thursdays. He had more comments about Thursdays right here. A shirt can have a license printed on it that says you can't wear it on Thursdays because you already could wear it on Thursdays. Hung up on Thursdays, isn't it? If I lawfully possess a book, I can read it on Thursdays, even if the license says I can't, because that's a right of possession under US law. It's not reserved to the copyright holder. Then he goes on to say, if you really think this is legal, you might think about a book with a license page saying you can't read it on Thursdays is enforceable. It's not. So yeah, Thursdays are nice, folks. And this release by Canary is going to be released on a Thursday. I remember Brad Garlinghouse also said Thursdays are nice. It mentions that the SEC is currently mulling multiple crypto-focused funds tracking individual altcoins, combinations of assets, and strategies. Among them are also spot ETFs holding Cardano, Avalanche, and Dogecoin. Well, of course, we know that little scare they gave before was probably just another shakeout get a little bit more extra coins. We know that a lot of big whales are accumulating them and putting them on cold storage. We know that XRP is going into the treasuries of companies. We know that the supply is going to be reduced. And now here comes Canary's spot ETF. So they must have accumulated a an acceptable amount of XRP tokens, and they're ready to let this beast go. Now, all I can say is don't be surprised if it falters a little bit at first. Remember, they want to shake you out. I just watched a recent video by a famous person who speaks about this, and he came right out and said it. If I can find it, I'm going to clip it onto this video in the end. It was on another content creator's page. But here it comes next Thursday, folks. Thursdays are nice. The first spot XRP ETF in November, as we expected. It's a little early, and I'll tell you what. I think it's a little early because they're not quite done playing the psychology of the market against retail. And so they're probably going to release the Canary capital, and then it's probably not going to, I don't know. I think that it's going to be a situation where somehow, some way, it's not going to prove to be what everyone wants it to be. And that's just another way to shake out. Or it may go to a certain level and plateau, like 5, and then plateau between now and say the 22nd and the 23rd, right? Which would be another 10 days. And so we'll see, but it's going to happen.
Crypto retail is in max desperation. We've seen leverage blowouts. We've seen issues with vaults. We've seen issues with yield protocols. And the market for sort of crypto native retail is just more depressed than I've ever seen it. I think that market is close to a bottom. It's hard to find a crypto native investor who still has much enthusiasm for the market. I think the market is shifting into an institutionally driven market. And interestingly, that market is still bullish. When I go out and speak to institutions or financial advisors, they're still excited to allocate to an asset class that, if you pan back and look over the course of a year, is still delivering very strong returns. So my view of the market is we have to get through this retail flush out. We have to hit bottom from a sentiment perspective. I think we're very close to that. And then I'm optimistic that we rally into the end of the year and into 2026 as the institutional investors who are more maybe even keeled about what's going on at a fundamental level in crypto start to drive the market forward. So I'm optimistic, but we do have to finish this washout of retail sentiment. And again, I think we're closer to the end of that
Flush out of retail. If that doesn't convince you that they're trying to shake you out and you need a gorilla grip to hold on, there's not a whole lot much more I can say. The institutions are taking over. They're trying to flush retail out, and they're trying to get you to believe that the returns are over. So that's why maybe the ETF will depress you. But you notice the man said by the end of the year and into 2026. So hang in there and keep your gorilla grip. I'm DK Will, and this is DK Will Talk About It. And I talked about it. Have a wonderful day.
Check the mic and make sure it sound right.